Welcome back to the Capital Mindset Show, everyone. Hope you guys are having a great day as always out there. We're going to be talking about Meta Platforms. Meta Platforms was down 6.09% here today. I'm filming this late at night, so you guys might be seeing this in the morning, hopefully the very next day, hopefully. Okay, so with that being said, let's discuss what's been going on with this company for the past year. If you look year to date, the company is actually down 72.48%. And how long has it been since we've seen these prices? Well, not since about 2015, okay? So it's been a really crazy time for this company. Now, is it well deserved? We're going to explore that here today. So before we begin, I'm going to dispel some statements, right? This is made by a much larger YouTuber than this channel. The channel will remain unnamed. Actually, maybe not. Maybe we're going to show that channel here today. So members of the community sent me these videos and I watched all of them. So just so you can see that I did watch, well, I didn't watch the full one of the collapse of stocks selling ads. I watched almost to the end. Been a busy bee, but I watched the full Pinterest explodes, Meta, and no more ads. Okay, so just to show you guys that that is the case. And one of the statements made by such YouTuber was that, well, ads are very cyclical. It's a very cyclical business, and that was part of the death of advertising. And also the issues with Meta that they're facing. Well, let me show you guys a free resource that you can in fact use. And this is actually a very popular statistics website. Oftentimes when you look something up, there are paid versions of this website, but a lot of the data that you might want to find for any mundane thing every day, you might find there for free. And so you can go to this website right here. So the website is Statista, and then you can see advertising spend in North America from the year 2000 to the year 2024. 2024 and 2023 are obviously estimated, so with the asterisk implied, as well as 2022 there, because we have not concluded the year. Okay, but what you can see here, what we want to highlight is the drawdown that has occurred in something like the Great Recession, right? Emphasis on the word great. And how much did advertising really come down? Well, not that much, actually. Okay, so that should more or less dispel, like, while in a recession, you can see a pullback. It doesn't equate to a massive drawdown. It's not the same thing when we're looking at, let's say, the building industry or anything else that we would consider cyclical, like semiconductors. We've just made videos about semiconductor stocks and also chemical manufacturers and how they kind of go through ebbs and flows, as well as we talked about in the past with the home builders, right? Remember those guys? Well, yeah, that's a little bit of a different story. So I want to highlight to you some other key points about Meta's performance thus far and some of the narratives that have been established around the company. Again, I'm going to be as constructive as possible and try to go through each and every point one by one. So again, the best way we can probably do this is through the earnings presentation. I also have some notes that I want to discuss with you regarding the earnings call. So before we begin, this is the earnings presentation. Publicly available information. We're going to go through it. This is the sales pitch, so keep that in mind. Now, one thing I actually do like about Meta's presentations, by the way, I just said that they're sales pitchy, but they're not, all right? So Meta's presentations are probably among the least sales pitchy presentations I have seen in the stock market regarding any publicly traded security. We've gone through many presentations in the past, and Meta's is pretty much just, here's the data, these are the numbers, buy us or you don't buy us, we don't really care. Okay, so this is kind of going to show us the advertising revenue by user, geography. It breaks it down. You can see rest of the world, Asia Pacific, Europe, US, and Canada. Focus here on the most valuable region, which is USA and Canada. Okay, so North America. And then that coincides with a lot of the spending. The statistics that I showed you earlier, remember that a lot of the income that Facebook or Meta generates through its platforms is through North America. So that's very important to keep that in mind. And then revenue by user geography, we're going to skip over this because it's more or less similar. Expense as a percentage of revenue. This is the first point of contention a lot of people have been having. And look at that. That research and development portion has ballooned to about 33%. This is a, cautionary tale, right? We see it was at 22%, 19%, 20, 21, 22, more or less the same. And then all of a sudden it began to grow 28, 30, 33. And that's when people really started to get concerned. It's not a coincidence. So people are concerned about that R&D. And if you see the general administrative, it's growing slightly or within the realm of reason. It went from a 6% low of last year or 2020 to 12% today, but it was 8% around there. So 8 to 12 today. It's not too bad. And then marketing and sales is within the realm of reason. And then cost of revenue is within the realm of reason, actually stable. That's the most stable spending that they have. But that makes sense. Software we would think of as having high gross margins. Anyways, going over to this, we have the effective tax rate. We're going to skip over this. We don't really need that. Net income, you see net income is coming down, okay, because as they actually push all these expenses, which we'll get to as to what it is that they're spending on, it's important that we kind of look at this. This is the picture that people are seeing. Net income's coming down, and we're going to see sales soon, but also diluted earnings per share. That those are related, so we're going to skip that. Capex, here we go. Capex is rising. Now, here's where I'm going to break this down. What are they spending on Capex? Where's this Capex going? Well, what we want to actually focus on here is something called like the CSP, Cloud Service Provider. You might hear them as this name. So these other entities that we can call, for the sake of argument, these hyperscalers, we can think of, AWS, Google Cloud, Microsoft Azure. We also have Oracle. Let's not forget Oracle, which is the one I have highlighted here today, which is actually the reason why I'm bringing them up is they are the CSP of TikTok, right? So when you watch those TikTok videos, it's not just magic that the data just goes and you're like, okay, here's my video. Okay, here's on to my next video, my next video. Well, it's all running on the rails of Oracle. Now, what does this allow them to do? Well, in the sense where we talk about the definition, these companies come to you with the solution. They have the infrastructure in place to provide that service for you. Well, Meta is going through a different approach. They're building it themselves. They're building that infrastructure themselves. Now, what are some of the benefits and drawbacks? Well, the benefit of going with an already existing provider like AWS, we've talked about AWS in the past. They're right now the leader, or something like Microsoft Azure or Google Cloud, is that they've done it for you. They've put up the expense, and then it's just plug and play for you, right? You're the customer, and you can kind of sit back and relax, but they're going to make a ton of money off of you. And of course, it's on a use case basis. Now, Meta is saying, we don't want to rely on that infrastructure. We actually would prefer to build our own and then take the longer term savings because we have the capital enough or necessary to invest in that infrastructure. Something like, let's say, a TikTok or, a smaller social media platform, let's say Pinterest or Twitter, they don't have the capability of doing that just yet. Even Netflix, a company that is in the portfolio, they don't have their own, right? They rely on another. Okay, so when you keep that in mind, this starts to make more sense. Well, where is this money going? And a lot of people, which we'll get to the R&D expense when we get down there, really have this misconception as to what's really being spent. Okay, so first we have the family daily active people. So we see it actually continuing to rise. For a dying company, I would have expected to see something else. But 2.93 billion people, for family daily active people. And the family daily active people is kind of like an opaque term. I'm going to focus on some other metrics here, but family monthly active people. So we have daily, monthly. You see that monthly, it's a bit larger. Of course, daily is the preferred one. We would use daily, for example, or we have used daily when we looked at Snapchat. And so Snapchat's really proud of their daily active user base. Well, over the family of products that Meta has, of course, Meta is a much larger platform. Now, let's go over to the family average revenue per person. So the average revenue per person is still $7.53. This is the beginning of where I see the new narrative kind of coming in. So look at Q3 2021. Q3 2021 was $8.18, and it came down to $7.53. This is where people are saying that they're making less money per user, but please keep in mind, let's take a look. Let's put some context to that, right? Everything, we need some context to this. So if we look at 2021, what do we see? Well, we see what we would consider perhaps tough comps, right? And so when we look at Q4 2021 versus Q4 2020, we do see a nice marginal increase, and we're seeing a decline. Now, relative to 2020's numbers, that's perhaps where I'm more interested in making that or drawing that comparison, because I understand that 2021 was a crazy year, and 2022, 2023, we're probably entering some recession. Going back to the beginning, remember, we're not expecting to see a massive drawdown like someone might suggest, but we might see a pullback here and there, a small pullback. Remember, that was the Great Recession. Now, that's total advertising. Digital advertising is going to be a bit, more nuanced there. And there is something to be said about companies actually wanting to flock to the most efficient forms of advertising, which I think is important that we'll get to in just a second, because if I don't mention the Apple IDFA, then someone's going to be pretty upset, I guess, in the comments, because we'll get to that. Okay, so Facebook daily active users. So this one is what we see as the 1.984 billion figure. And what I want to highlight to you here is North America, the most valuable segment right now, currently, is basically stagnated, right? We're not seeing any decline, but we're seeing stagnation. 197 million people in USA and Canada is pretty incredible, considering how many people are perhaps, let's say, the target audience for this company. Now, rest of world and Asia Pacific is where the excitement of the growth is happening, but we want those economies to grow further into the future. As they grow, we'll see that potential to perhaps monetize a bit better. For now, it's still just in its growth phase, and so we're trying to focus on penetration rather than just increasing that revenue per user. That will happen naturally over time. Now, Europe has been kind of the stagnated sick child of the group because it's not really growing much. It's already kind of mature in its phase now, and the revenue isn't really great because the European economy, to be quite frank, hasn't been doing too well for a very long time. And it's not really seeing any growth, and there's no growth in the foreseeable future for the European continent, unfortunately. It's not that I wish upon that to the Europeans, it's just the way it's been, okay? And we're seeing that also in the value of the advertisements, because that's kind of an indication of the consumption levels or the consumption capacity of the nations. So Facebook monthly active users, overall, kind of a similar story here. Now, this is another part, the ARPU, so average revenue per user, broken down by geography. Again, North America, solid, the most valuable. And then we also see Europe second most valuable, but nowhere near as valuable as the North American audience. And then worldwide, Asia Pacific, actually not too far off from Europe, actually, with worldwide. So this is where things are. So we're kind of saying like Europe is still above the average worldwide because you can kind of think of worldwide as the average, and then United States and Canada is well above the average. But then Asia Pacific and rest of the world, remember, those are going to be the lower bases, and they're going to be growing. And then as that grows, the worldwide rate should grow, being that, let's say, the others don't fall too much, okay? So let's go down to some of these other numbers that I think are a bit scary, right? So we see the free cash flow figures. This is something that someone might be pointing out to and saying, well, look at that. They went from billions of dollars of free cash flow to now just 173 million. And this is perhaps the reason why we did see a bit of a crybaby in the case of Jim Cramer. So if you guys haven't seen that video, I think it's actually time we play this video. So here we're going to play the video.
If it is Meta, the report in the Journal looking to cut as much as 10% of expenses pretty soon. Morgan Stanley actually ups their 23 EPS estimate.
Yeah.
Sees 3 to 8 billion of 23 OPEX savings.
There's a guy, usually he's next to us in the middle here. Yeah. I mean, Jim, you were talking about this weeks ago. You know, every so often I actually give you credit.
Really?
Yeah.
Thank you, David.
You know, you're welcome.
I thought you were on your phone. I didn't know you were listening. That's so cool.
Yeah, I was listening out of my right ear, but you were talking about this very subject exactly in the same way that they were culling. None of them seemed.
All right, so I want you to see that opinion right there, and then now this one.
Zuckerberg video of buying and selling goods in the metaverse, including real estate. You can buy property next to Snoop Dogg's house in the metaverse.
I miss Snoop Dogg. I guess I saw Mark Anthony spin stuff at the fabled wedding and kind of the Beckham Pence wedding.
Yes.
Nice picture of my wife, by the way, on Palm Beach Post.
Very nice.
But I do think that the metaverse, the omniverse, is very real. Now, when I speak to Facebook, I always say, listen, emphasize the education.
All right, we'll pause there. But basically, we saw that Jim Cramer is more than willing to buy at much more elevated prices. And this is similar to a stock I've covered in the past where I kind of showed you guys the evolution of an investor, how they kind of break down And I think we're seeing this in a more public figure this time rather than a larger YouTube channel. So I think it's fascinating to watch. And now the final video, we're going to be basically putting out or showing you that this is him basically crying. So remember, we went from an evolution for he's fairly positive, then he's extremely bullish, and now we are at this Jim Cramer here.
Conscious that, for instance, with Jim Farley, who took a project that was his, Argo, and closed it because it was not ready. It was not near enough. This situation is almost a rogue situation. I had thought there would be an understanding that you just can't spend and spend right through your free cash flow. That there had to be some level of discipline, and I didn't get it. But David, what did I get wrong? I trusted them, not myself. For that, I regret. Okay. I've been in this business for 40 years, and I did a bad job.
Okay, so we're going to stop it there. But basically, you can see the level of evolution that this man has gone through on this company is not too dissimilar to other creators on YouTube that we've kind of gone over with a company like, let's say, Netflix. And you can kind of see their transformation occur also in real time. Now, with Meta, it makes it sound as though the company is just really strapped for cash. And okay, let's explore that for just a second. So we're going to go over to the quarterly financial statements that were just released. And I just want to say, okay, so I'm seeing about $41 billion in cash and cash equivalents, as well as marketable securities, which is short duration debt that's probably held onto the balance sheet to just generate some extra yield. While it is down from the December quarter from 2021, it's still a hefty chunk of change, especially now relative to the new market cap size of the company. And let's look at those liabilities here. So looking at the liabilities, we see a long-term debt pile of about $9.9 billion, something that didn't exist before. So they're bringing on some leverage onto the balance sheet. And for now, $9.9 billion, I can tell you that the bank that lent them that was begging for it. So just knowing how banks have been kind of behaving over the past, let's say, decade, strapped for finding anyone who they want to. Well, we've had a lending growth problem. Those are videos for another day, but we've had videos on that on the channel. So a company like Netflix, well, slip right there, by the way, but Meta doesn't really have a problem. Same with Alphabet, same with Apple, Microsoft. They don't have a problem getting capital right now. Okay. And especially where the quality of the balance sheet is still so pristine, so high, it doesn't show. Now, remember, we've already kind of talked about some of the things that they were spending on. Well, that Capex investment is for that infrastructure, not only for the metaverse, okay? It's also for their current family of apps. People are kind of taking this idea and then just running with it. That they're kind of, I think, shaping the narrative that the company's only spending on the metaverse and that's about it, which is already not the case, okay? A huge chunk of the spend is on metaverse, yes, but a huge or bigger or larger chunk of the spend is actually being spent on the traditional family apps. They're not being neglected as most people think, although that is, I guess, one of the prevailing narratives around on the internet, which I find interesting. Now, one of the notes that I want to talk about is all the other little businesses that Meta has inside of it that have been growing really nicely. Well, let's talk about one of the most exciting and most underappreciated assets under Meta's, let's say, family of assets, and that's WhatsApp or messaging platforms, but WhatsApp in particular. American investors, and I've stated this in videos in the past, have a difficulty really wrapping their heads around WhatsApp and its true potential. The amount of adoption and reach it has elsewhere in the world. In fact, it got to the point where I was almost forced to utilize WhatsApp as, I'm an American citizen, in order to communicate with others outside of the country, those in Canada, those in other parts of the world as well. Now, WhatsApp as a form of monetization is just on its starting, right? It's just starting. It's not even there yet. So WhatsApp actually just passed the $1.5 billion run rate as of this quarter. No one's really talking about that. It's growing more than 80% a year, which is pretty crazy. And again, no one's talking about that one, but they're talking about these other stuff. Of course, you could make the argument, and I agree with you, that for now, it's not really a big piece of the pie. We can't really take it seriously until it makes up a bigger portion of the pie. But I think just you wait. WhatsApp's so entrenched in companies or countries, that like India, that are fast growing, the potential is really there to truly benefit from that economic growth. And if you want some sort of playbook that you want to see, okay, well, how do I envision what WhatsApp could be? Well, look no further than WeChat in China as kind of an example that Westerners really seem to understand a little bit more when you think about Tencent. So those of you investing in those Chinese companies, you know about Tencent, you know about WeChat, right? So just think about WhatsApp as being that potential in a large portion of the population of the world. So it actually solves a lot of issues with the underbanked, quote unquote, in a lot of these countries. And it also makes it easier to conduct commerce in a different fashion, to kind of create a quasi POS system via your phone, which is actually really interesting. A really underutilized way to monetize. And again, they're waiting. They're kind of slowly getting in there. And Facebook or Meta is pretty famous for that. They've waited a very long time to do this for WhatsApp, and it's only just now rolling out, and it's growing nicely because they've already built out that ecosystem. They've already entrenched themselves. They already have the next thing. And Instagram was a similar way. Instagram, they bought for basically nothing at this point in terms of the value it provides for Meta. And I would argue that Meta, or one of the most valuable social media platforms, if not the most valuable, is Instagram. And what about Instagram? Well, we're seeing the Reels, right? Reels is only just now making crazy impressions. The impression rate is growing nicely year over year at a run rate of about, I think it was like 50% that I have it written down here, which is crazy. So it's a 50% increase year over year. And we're seeing a figure quoted in the actual report of about 1 billion. So 1 billion Reels are actually being shared on Instagram now. And I don't know. I don't know about you guys, but the Reels AI that they've also unveiled, and Mark actually did discuss it on the call, which is actually their way that they're getting around IDFA. And that was one thing I had a conversation with a good friend of mine who's familiar with the matter to some extent, we could say. And one thing that Meta has been working on really hard is to try to figure out new and unique ways to kind of get around the IDFA. So for those of you who don't know and need a bit of a refresher, the IDFA, well, in the context of Apple, is because Apple basically made some sweeping changes around privacy in their iOS, and this severely hampered the old way of collecting data and using that data to advertise or create effective advertising campaigns on these mobile platforms. And so that was a big hurdle that Meta had to really overcome, and something that they estimated the cost could have run about $10 billion per year. Now, this new AI systems that they're rolling out, for now, for what we see, for what we're being told, seem to be actually increasing the effectiveness. And again, we just went over some of the stuff in the presentation. We just went over some of the rates for the actual. The sales haven't really been hampered when you compare it after, well, basically normalizing for the tough comps from previous years, right? Now, we saw on a constant currency basis, the growth was still about 2%. So keep in mind that currency, of course, is a factor here. So if we include that, they still grew by about 2%. Not as good as Alphabet, but Alphabet's a whole different animal. That's, of course, I'm going to be too biased if we talk about Alphabet. But sticking to Meta here, it's still quite impressive. I don't want to dismiss Meta here, and I want to actually give Meta the credit where credit is due. They've done a fantastic job, and I think the market is really demolishing their parade here and really not giving the company the credit for all that they've accomplished. And now everyone is really focused on this spend, which I haven't even gotten to the metaverse yet. Okay, but I'm gonna finish off with that and leave you guys off. I know this is a longer video, but if you guys enjoy these longer videos, feel free to leave a like. And if you find these longer videos to be more valuable, that lets me know that these videos are the ones that you do desire. And remember, on YouTube, because it's kind of broad-based content, you're basically voting for content. All right, so if you thumbs up a lot, it basically lets a creator know to do more of that. Okay, so if we're kind of looking at the effects of IDFA, in reality, we might see it maybe play out more in the future. But again, from what we're seeing right now, it appears as though their new implementation, the new techniques, is actually making ground, okay, which is a big improvement, because probably where the direction that Apple wanted to go is kind of leverage that power that they have and make more money off of companies like Meta by selling them the data. And that's basically pure profits for Apple, but still basically kind of strong arms Meta and these other companies to pay them money to get access to the data. So at the end of the day, they're still going to be able to perhaps provide effective advertising, just lose out on some of the profits that they otherwise would have kept. It will just go to Apple. But if they figure out a way around it, again, it should be to their benefit. Now, with that being said, let's kind of focus on the metaverse, right? The elephant in the room. What's going on with the metaverse? Well, the metaverse kind of has been memed into existence as this Ready Player One. And honestly, if I'm being honest, Meta has done a terrible job at really marketing it towards, well, let's face it, I'm gonna get to this, but you're not really the customer. So it doesn't really matter to the investor, or shouldn't matter to the investor, what the average person kind of thinks about it right now, as much as it matters for corporations to think about, because that's the real winner. And I've said this a very long time ago, right? Well, not very long time ago, making it sound like it was years ago. But in the older videos regarding Meta, or at the time it was called Facebook, we discussed this concept that in reality, the golden goose is really in the B2B solutions that Meta can build upon this. Not so much the B2C, although that can be an extra, that can be an added benefit that maybe we would utilize it for something akin to that. But the B2B solutions are really where the gold mine is. And there are companies that are recognizing this. There's companies like Microsoft. So if you want to see what's going on recently, you can actually read a bit more into this. Now, this actually looks kind of bad, actually, but I'll explain a little bit in greater detail. But Microsoft is going to be building out a lot of their products on the metaverse platform so that you can use Microsoft's products like Word, Excel, Microsoft Power BI, Microsoft Teams on this network or infrastructure that Meta is building out. So Microsoft still wants to maintain its relevancy and dominance, keyword dominance, in the business world. And so kind of adapting to the next thing is what Microsoft's really trying to focus on doing. And this is, I would argue, someone's going to win in doing this, and that might be Meta. And the reason why, and I think this is something that you should probably, or I just implore you to actually investigate yourself, is looking at all the companies that Meta has acquired. A lot of them weren't probably necessary, but Meta has been acquiring a ton of digital assets, a ton of little tech companies, all focused on, let's say, virtual reality and augmented reality specifically as well, to kind of distinguish between the two, by the way, augmented versus virtual. You should also know the difference too. But looking at that distinction, they've acquired a whole host of companies that all have their little specific niches to provide to the parent company. And that's giving Meta this massive, sweeping control over this potential future. And something that will take, let's say Apple and Alphabet a bit more creativity, because they weren't as aggressive in the beginning to acquire a lot of these assets, to figure out ways around it. Otherwise, they're going to have to be using or needing to use Meta's technology. So it's something that I'm sure that they'll get around in some capacity. Like, we're going to see an Alphabet competitor. We're going to see an Apple competitor. That's pretty much going to happen. And I would say that Microsoft kind of teaming up with Meta in this case is going to be like the duo Meta, Microsoft versus Apple in the business world. I'd probably be betting on the Meta Microsoft duo rather than Apple by itself. And considering, and I know this is going to be very blasphemous, but another company that I absolutely love, Amazon as a business, is absolutely, well, they really did show us, and I think a lot of people didn't pay attention to that, but grab your phone, okay? What does your phone have on it, by chance, if it's an iPhone? Well, it has something called, that's right, Siri, right? So you have that virtual assistant, correct? But what is the one that everyone thinks of? Alexa, because that's the one that won the war, right? Apple was first to the game, but they lost the war because Apple's dropped the ball on that. Apple's dropped the ball on home devices, home smart connected devices. Where's that? Apple TV. Where's that, right? Fire TV won. Alexa home devices won. Alexa voice assistant won. All these things that Apple basically just missed. That doesn't mean that they're going to miss the next one, but it's not a good track record thus far. They're basically the iPhone, which the iPhone was fantastic. You can see how much they've leveraged the iPhone since then. You can see how much they've leveraged their whole ecosystem since then, and they're fantastic at it, okay? And all the services that they built on top of that. They have their platform, and they can strong arm everyone basically into giving them some sort of money or toll road, so to speak. And, it's just how it is. They've done a fantastic job. Meta is trying to do that as well, okay? Whether or not that's successful, different story entirely. I'm just exploring that aspect. And I think personally, again, that the business world is going to move in that direction regardless. It's just a question of who is actually going to dominate that. And that's maybe something you want to invest in, and Meta provides that for you. But I want to also showcase that there's a lot more to this company than really meets the eye. Now, on to the closing thoughts and conclusions. And in reality, I'm not doing a valuation model in this video because I don't think it's actually really necessary, because not much has truly changed. Just some of the assumptions on some of the Capex spending that's kind of affecting it more recently. At this point, at this price, it's gotten to a crazy level where any new capital that's really coming in, I'm kind of just in shock. I'm like, and I was talking to the community members about this just recently. Where is my money going to go? It's always a question that comes to mind when I have new capital coming in. Where's my money going to go? And right now, there's seldom another opportunity that I find rather than Meta to really get a potential outsized return. My only concern, and this is actually the funny part of the concern, well, it's not my only concern, but it's one of the biggest concerns, is that certain YouTubers are pretty popular on it, which makes me scared. It makes me really scared because there's always a possibility that I am wrong, and I'm okay with that. Now, listening to some of these YouTubers get into this company and like this company really puts me at pause. It really makes me think, ooh, I might be like severely wrong, and that could be the case. Now, I personally am not going to let that really change my mind here, because of course they could be right as well, but for the wrong reasons, or I could just be flat out wrong, or maybe I'm right for the wrong reasons too. That could also be the case as well. Now, that's pretty much what covers basically all my thoughts in 30 minutes or less, or we're at 31 minutes. So I think that Meta, again, is going in this direction. There's way more than meets the eye for this company, and I think a lot of people are judging it right now too prematurely. There's a lot of narratives kind of getting out there. I mean, I'll shout out Investing with Cole, the amount of Reddit posts you have shared with me to just make sure that I can just cringe all waking hours of the day is phenomenal, and please keep doing that, sir, because it is entertaining. But again, I hope I provided some form of value, some form of different perspective. Maybe you've been hearing one perspective and I provided a different perspective. Maybe hopefully I didn't, didn't conform to your bias already and just made you more stubborn in it. I don't know. But let me know down in the comments section below, what do you think? Do you think this company is an interesting opportunity? Or do you think there is perhaps a huge mess that awaits this company, and it's going to be something that's going to go for the history books? Because that's what it would be. It'll definitely be one for the history books. I don't equate this to a dot-com bubble issue, because in the dot-com bubble, we had a lot of companies that were pre-revenue, not profitable, and this is definitely a very profitable company. Aside from all the Capex investment, or not the Capex, the R&D expenditure, but definitely not the same scenario. I would not compare them to the same thing. Now, let me know down in the comment section below, what do you guys think? On that note, thank you guys so much for watching, and I will see you guys on the next one. Bye.